Good evening, everyone, and thank you very much for joining us this evening for our investor briefing with DXN Limited. Tonight's session is an opportunity for you to hear directly from the CEO, Matthew Madden, and I guess and also an opportunity for you to be able to pose any questions you've got and get an understanding for what DXN are up to at the moment, what their plans are, and how they plan on exploiting the opportunities that are out there in the marketplace. So I'll introduce Matthew in just one moment. He's going to be running the session. I've got a couple of housekeeping things to run through just to set the session up. Any advice contained in tonight's presentation is general only, doesn't take into consideration your personal circumstances, and you need to decide whether it's appropriate for you. And I'll bring up the DXN Limited disclaimer, and whilst I'm rolling through that, Reach Markets are assisting DXN with their communications. My name's Patrick Nelson. I'm the Managing Director of Reach Markets. These sessions are an opportunity for investors who are looking at DXN and making a decision about coming on board, an opportunity to understand DXN a little bit better, and also to ask questions directly to those running the company, and also a way of keeping existing shareholders updated. And the plan is to run these sessions on a regular basis going forward, and especially around maybe significant events in the business as new information comes out. So this session will be recorded and available off DXN's Investor Centre, which you can find off their website. So if you want to go back, probably within the next 24 hours, once it has been complianced, it will be up and available for there. Now, if you have a question, to ask that question, you just need to type it into the chat box. If your chat box isn't open, there's a red arrow top right-hand corner. You click on that, it will launch the chat box. If you type in a question, the rest of the audience can't see that question. I am seeing the session, I can, so I'll read it out, so you don't have to worry about your whole name coming up or anything like that. I'll simply address you by your first name and ask the question to Matthew. We'll try and ask them as we go, but we're mindful of getting through the presentation in a timely fashion so people can get on with things. So at the end of the session, if you haven't got to all the questions, we'll go through every question at that point in time, take whatever time is needed to go through all of that. So aim to finish at around 7:30 p.m. Eastern Standard Time. Again, this session is an opportunity from Matthew, not myself, so I'll hand over to Matthew just now. But I know Matthew, as the CEO of the company, has joined DXN. It was August, I believe, and they have been an absolute hive of activity. I'll let Matthew talk to that. Matthew, I'll hand over to yourself.
Patrick, thank you for the introduction, and thanks for everyone that's attending. I really appreciate you taking an interest in our company as an investor or potential investor, and keen to just tell you a little bit about our company and where we're going and what we plan to do. And hopefully I can answer the questions that you pose. All right, Patrick, should we box on and get on to the next slide?
My apologies. Matthew, my slides are frozen, so I've jumped forward a couple. So is this the one moment? Is this the slide you want me to put you on?
Let's go with 5, because I think we've done the disclaimer. So we'll get into this one. Well, essentially, DXN is a modular data center company, and I think we really want to establish that as a key element of our business going forward. So the top tier 3 facility, DXN Limited, from the Uptime Institute, issued to us on the 18th of September 2019, signifies that we are the first containerized modular data center company to achieve tier 3 status in the world, according to Uptime Institute. A huge accolade, and one as an investor you should be proud of, because it signifies the company is moving forward as a market leader in the modular data center market, which is growing at extraordinary compound annual growth rates. So DXN is well positioned to start to service that market. Now, in addition to that, we have what's called the Tier 3 and Tier 4 Uptime Institute Tier Ready program, which means that our designs for modular containerized data centers are already approved by the Uptime Institute as ready to achieve that status. So they're design ready. Now, if we're to get them construct ready, it means that we would have to go through a 72-hour rigorous testing process for each one of those data centers once they're deployed and active for service. And that's exactly what we did with Sydney. So that's why it's a huge accolade for us to have achieved that, and one that we're going to continue to grow on. If you could go to the next slide, Patrick, that'd be terrific. So as I was sort of alluding to before, there are two routes to market really for us. The first market is our data centers, and Sydney being our first in Sydney Olympic Park. It took us basically 4 months to deliver that data center once we had achieved construction certification to proceed. And that's a absolute testament to modular deployment. And being able to rapidly deploy a data center means that we have better quality controls. We get a repeatable result. We've got improvements to project management that reduce risk. And essentially, the way that we reduce that risk is we shift the complexity of electrical and mechanical designs and tasks from the construction site into a highly controlled and more productive factory facility, which we have in Perth, and that's what we do. So the Sydney data center is an absolute testament to that. It's now up and running. We have a modules division, which is our other route to market, where we actively build those modules for others as well as ourselves. And our capacity with that facility today is 35 to 50 modules. So if we can go to the next slide, that'd be great, Patrick. Again, this is a bit of a corporate overview. We might just skip through this slide because it's probably been updated already for the market with the recent deployment. Look, our vision at the company for the next 12 months is really to focus on sales. It's a customer-driven market. We have to get customers into our colo facility in Sydney, and we are actively, predominantly focused on that outcome. Now, being a new facility, when you build it and you don't have an anchor tenancy, you then have to go back and backwards solve that problem, which we're actively doing today. So we've got a strong pipeline, which we can talk through a bit later about that and how we're going about solving that problem. We have a module sales division. We anticipate in selling greater than 12 million of those. And as you would see, we've started off with a strong landing today with a $2.4 million sale to Southern Cross, again signifying our strength in the Asia Pac market and our focus on edge data center and cable landing stations in the market. Now, in terms of us developing the market, we see a huge opportunity in the Southeast Asia, Pacific and Australian market for edge data center deployment. We see an opportunity for us to be a significant player as an edge data center provider. So just stepping out from your Sydney, Melbourne, Brisbane type locations into your regional locations such as Wagga or Dubbo or Newcastle in New South Wales or your Geelong. These are strong regional centres in Australia that are needing different types of deployment, and we're working our way to how we can solve those problems. So we're quite keen on how we can do that. The edge hyperscale market is a strong market that's being driven in Asia, especially. What we're seeing is a modular design is being much more preferred. And by modular, these larger providers that are wanting to build massive data centers are saying, actually, we don't want to deploy all of our capital today. We want to do that over time. So we want a modular design that can help us do that, so we can actually build as we require the additional capacity. And DXN is again well positioned to be able to support that. Next slide. This is our view of a competitive position in the market space, and really what we're focused on is edge deployment and 5G. So 5G, there's a lot of hype about that, but essentially it's a new network provision into the market, which means it's bringing the core of a mobile network closer to the consumer. And in order to do that, they need to have data centers to house that infrastructure so that the compute can be closer to the consumer. DXN is extremely well positioned to be able to do that in a number of different fashions, and I'll just point out those strengths. One, we're a DC manufacturer, and in that competition of well-versed and scalable and quite substantial companies, none of them are manufacturers of DCs, and we are. The other part is that a lot of them aren't particularly focused on edge DCs presently. They're more focused on a hyperscale type environment and making sure that they can service the large cloud providers in a centralized fashion. The other part to it is rapid deployment, and that's the advantage of a modular data center business where we manufacture all of the risk. We take out all of the risk in the factory, and we're able to deploy to site in a clean fashion. Next slide. This is a bit of a buying model that we see that we operate within. So the first is that the capital requirements for co-location are quite substantial in the sense that it's a longer period of time for realization of that capital. It's a slower burn. To co-own data centers means that we share the risk with others, and in a turnkey environment is that we're able to turn over capital reasonably quickly by building for others in that format. Now, the top one obviously carries a longer value for our business, but we need to have a mix in order to support a smaller capital business, and so we focus on all three elements: co-location, co-own, and turnkey. Next slide, please. Okay, so Global Market Insights provided a view on the prefabricated modular data center market worldwide. Their view is that this market is growing at a compound annual growth rate of 20% per annum. And in Australian dollars, it's going to grow. It's grown from 13 million in 2017 to 50 million by 2025. The point being is that we are a prefabricated modular data center manufacturer and operator. So we are in the right market, and we intend to really capitalize on that growth. Next slide, please. This slide is really, in addition to that, talking about edge data center market. What you'll note is the edge data center market is growing at a similar compound annual growth rate to the prefabricated modular market. The reason we are linking these two together is because edge is all about rapid deployment, and rapid deployment requires a modular design and deployment. So can't be built on site. It needs to be thought about and built in a factory where it's quality controlled and easily deployed. And the proof points for us in really market acceptance, certainly in Australia, New South Wales government's announced a $100 million investment strategy into regional deployment in New South Wales, 2 site locations, Wagga and Dubbo. They're looking to deploy 100 million as a mix of fibre optic infrastructure, 5G, black spot restructuring, and also making sure that they have capacity or compute capacity in those regions to support. So for us, that's a real proof point in Australia. In addition to that, we are seeing an unprecedented demand in edge data center requests and requirements from our team based in Kuala Lumpur. The team has experienced an enormous amount of demand associated to new DC deployments. So we're quite confident that this market is going to quite substantially explode over the next few years. Next slide. not as stratospheric as the previous growth rates, but nonetheless, the co-location market in Australia is still growing at a 9% compound annual growth rate. And there is some capacity slack that needs to be taken up. The important part about this is there is still growth here. It's not all about hyperscale. This does not reflect the hyperscale market or the wholesale market. This is more about your corporate, enterprise and government markets requiring co-location capacity in Australia from third-party providers. Next slide, please. So just quite quickly, for those of you that have not been to our site in Sydney or experienced it, it is actually a completely modular design. In essence, it deploys everything that we do inside our factory into the location. This is a great facility. It achieved Tier 3 constructed certification in 4 months from deployment, which is absolutely an outstanding effort if we consider that traditional data center deployments take 18 to 24 months with a bunch of slack in that data center. This has capacity available and additional capacity can be added quite quickly. But it's live, it's ready for business. It's taken its first couple of customers in there now. And as we build this up and recreate it, we expect it to be a long-term substantial asset for our business, income producing asset. Next slide. Really what I wanted to talk to here and what I wanted to just sort of highlight is that it's not just the fact that we have built a data center and we're waiting for people to come to it. We're actively marketing that data center. The channel is an important strategy for us. The channel is a more efficient way for us to sell the data center. It means that we use multiple sales forces to sell our facility rather than our own. And as you can see, the pipeline demand from the channel is quite strong, and that represents a good position for us. And look, we're not pioneers in this regard. As an example, NextDC employed a channel strategy in their early days of data center deployment and continue to do so to make sure that they capture a broader spread of the market rather than us traditionally going down one line of direct sales. So we approach this in a different way. The real estate section that we've got highlighted there is our ability to work with Tier 1 real estate properties in our region. And our region is the Parramatta region. We don't view Sydney as just one place. Sydney is a multi-site location, and geography is an omnipresence in any data center deployment. You have to be in the right region for your market. So in the same way that you have a shopping center that services a community, a data center is in the same format, and that's the way that this data center will operate. And the Parramatta region, it's very well positioned as the closest data center to that locale, and we expect over time that will reflect. Thanks, Pat. Next slide. Okay, our modules division. I really wanted to just highlight the 5 areas that we sort of see as demand areas. So we already talked about hyperscale and edge, but really what's the size of that? It ranges from above 1 megawatt to 10 megawatts in capacity, 200 to 2,000 racks as a typical deployment. At that 2,000 rack level, that's at the largest scale. For us, we typically would see sort of in that 500 type range to be deploying. Telco and government, we see this as more your regional deployment into key locations around Australia. The 20 kilowatt is really highlighting a small micro DC, and up to 1 megawatt. If you look at 1 megawatt, you could say that that's about 145 racks in a location, maybe up to 200 if it's lower density. What that really means is that those regional centres that New South Wales government is focused on are key development areas, and we can see those opportunities as coming forward in a lot more, and that will represent for us co-own and operate opportunities, or just straight operate opportunities, and again, smaller data centres, but good yield. The cable landing stations, I already highlighted earlier that we've had some success there, and today we made an announcement with Southern Cross. You would have seen the note from the CEO of Southern Cross, Laurie Miller, that the reason for his choice was on the quality of our product, and the high standard that we deploy. So, you know, for us, being in region and being relevant, and helping those types of customers is really key. So again, we see some strong demand coming from cable landing stations ongoing. Mining is a particular use case scenario, and because we are a Perth manufacturing facility, we are well positioned to be able to support that market. And micro DCs, again, this is really about 5G deployments. These are 1 to 4 rack type deployments, closely located to base stations, or supporting a number of base stations, which bring applications closer to that edge deployment. Thanks, Patrick. Next slide. Now, look, Patrick's told me not to, you know, we did a little bit of a research, and me being that way inclined, I'll declare that. Told me not to apologise, but I will. The unweighted module pipeline is at 207 million in this slide. It's actually at 300 million. This slide was produced about 20 days ago, and we just didn't get time to update this, so I do apologise to the audience. The reality is that we are seeing a strong demand in the region, and it is absolutely reflective of us engaging in the market and having an effective sales force. But also, more importantly, is as we have started to build momentum in the region, firstly in securing Radlink, Synergy, Southern Cross, now the Nui cable landing station, and the Cook Island cable landing stations for the Manitoua cable going through, we have started to build momentum, and that is being well recognised. And those customers that have dealt with us to date are absolutely referencing us to others in an unprecedented format. And I've got to say that it's something that I'm very proud of, the fact that we're able to have customer reference as an early stage operator, and it really lends me to believe that we are in an absolutely strong position to keep supporting that market and growing. And the additional part to that is the opportunity associated to deploying data centers associated to those cable landing stations, and secondly, what I would call the latent income that comes from being able to maintain and manage those over the 25-year lifespan of those cable landing stations. Now, one of the things that we have received some criticism on is, you know, selling cable landing stations or modules is just a once-off thing. The reality is that we have now attached annuity streams to those, and we see our customers actively supporting that, because who better to support your data center than the guys that manufactured it at an affordable rate. So we see that as a long-term growth for us in building a strong maintenance business attached to the modules. Thanks, Patrick. Next slide.
All right, thanks, Matthew. We're on to question time. Is there anything else you wanted to add before we kick off there?
No.
No. All right, wonderful. All right, well, that was great. Thank you very much, Matthew. There have been quite a few questions that have come through while you've been talking, but it just felt that probably there was better to leave them to the end. So I'll start kicking off there. From Finola, hi, Matthew. What opportunity do you see for recurring revenue from maintenance from the Southern Cross cable contract?
Yeah, hi, Finola. Yeah, good question. I was just, maybe that was an early question that sort of came through, but look, we see the potential for a long-term relationship with Southern Cross, maintaining those cable landing stations for them. There's a bunch of things that happen with remote locations like saline protection and gensets, etc. So they are quite keen on us helping them solve that problem and supporting them in it. So yes, quite high.
Neil has asked, is DXN a competitor or a colleague to NBN?
I'd have to say we're an absolute colleague. We're definitely not a competitor at all.
Finola had a follow-up question, which was, what does Flexen's closure departure from the market due to their bankruptcy mean for DXN?
Growth, in short. It's an unfortunate situation that a competitor has suffered of late, but there are a bunch of opportunities that are available to us now that previously weren't there, and it's certainly expanded our capacity in that region of Asia Pac, definitely.
All right. So Henry has asked, do you see the DC in Melbourne being up and running in the next 24 months?
It's an interesting question, and it's one we're reviewing presently. I'm reluctant to deploy the data center into a build until we have an anchor tenancy secured. So we're actively working on what that might look like.
Anton has asked, what is the path to profitability and time to break even? What are the current cash burn and future burn to self-funding?
So I think the self-funding question is an important one because, is it self-funding to break even in the current situation, or is it what's the growth strategy look like? So let's tackle the self-funding question. 1 megawatt in Sydney sold, and about 25 million per annum in module sales leads the company to a small profit.
Right. Jenny has asked, how has the rights issue gone?
I think it went really well. So it was fully realised. We were confident when we were going into it that the story was there, and we felt that the market was receptive to that story and supportive. And the direct result was it was slightly oversubscribed.
Okay, there was a question regarding recent share price performance, and I'll just head this one off the path. You can add something to this if you like, Matthew, but an officer of a company can't really comment on their own share price. So, but what you'll find is if there's a rights issue, a share purchase plan, significant placement and the like, you'll see additional liquidity for a stock because existing shareholders, are arbing the opportunity that's there. So it's pretty normal to see selling come in during those periods. I think it's held up quite well, but if you're looking and you're a buyer and you're a believer in the story, getting set during these times where you've got that additional liquidity, that opportunity to do so without driving a share price up is sometimes there more so than what it would normally be. So I would see this as a great opportunity if you were looking at getting set in there. I don't know if there's anything you would add, Matthew?
Look, I think like any investment, you make those decisions over time, and yes, when we have to go out and seek additional funds, you're right. My view is that there's a good story behind DXN, and one that seems to be getting the right ears and support, and it seems to be well supported presently.
Ryan has asked, how are you accounting for the 2.5 mil contract and subsequent on the percentage completions basis or other? And then there's asterisks and subsequent contracts. Matthew?
How are we accounting for it? So I'm almost declined to hand that over to our CFO who's sitting here with me, Greg. But typically we have to record that in accordance with our accounting policy, and presently that's on completion of those modules. We are actually talking about that at present, but there's no decision associated to that from our auditors. So the present form of accounting is that it would be recorded at completion, and there may be a change to that policy, but you know, that's unknown at this point in time. It's important to look at the cash, I suppose, as it comes in. The customer typically pays an upfront fee as a start, and then they pay various milestones. As we complete those milestones, they pay them. In terms of additional revenue, I think was the other part to that question. Look, we are working with Southern Cross on a fourth module as an option we've provided for them, and they're currently working with the landing party in Samoa on that, and we're actively supporting them through that. So there's a potential for that to come in to us. And then I think finally the ongoing opportunity for maintenance with modules deployed in cable landing stations is there for us, and we want to help our customers and support them over a long term with that. And typically a cable landing station life is 25 years. So you know, our plan is to be there to support them on that.
Anthony's asked, does DXN only deploy containerized deployments?
By containerized, I'm assuming, Anthony, and I'm taking a big assumption here, is referring to an ISO type deployment. If that is the case, presently that is our design. We have several other designs that we're working with, which are different to that, but again, they are in a containerized modular format. So yes, we do containerized, but it doesn't necessarily have to be an ISO standard. Shipping containers.
Well, we've got to the bottom of the questions so far, so if anyone has got any further questions, put them in while you've got Matthew here. I believe we've asked every question that's been put to us. If there's anything that I haven't called out, please put it in again. If you're someone that is a shareholder, you can always go to the Investor Centre at DXN's website, and there is an opportunity to go in there with all the updated information. You can ask questions directly to the company from the Investor Centre. You can certainly speak to the Reach Markets team if you've got any questions or need us to relay anything back to the business. But all the information is on their Investor Centre. It's very well put together. If you're not a shareholder, well, there's no guessing what the stock code is. You can go onto the ASX and have a look there. And if you've got any questions or you need any further assistance, just let us know. Now, a couple of questions have just come through. Matthew, what does the 35 to 50 module capacity at the Perth factory include or exclude of the required data center modules for DXN's data centers?
It's our total available capacity to build. If our data centers in Sydney required us to build 35 modules, then they would go directly to them. If it didn't, which it currently does not, it means that we have that available capacity to the market. So at present, it does not include the Sydney or Melbourne data centers.
Right.
Did that answer the question or not? I'm not sure that
I think so. Sorry, I just, the next question I've got is from Ryan. Any guidance on what percentage conversion rate on the pipeline or F20 guidance?
Conversion on the pipeline. Typically, we try to work on on the ratios that are in that number there. So where we say that pipeline is a weighted pipeline, we're focusing on that weighted number, not on the higher number. So in the case of Sydney DC, I think it was around 3 million we're heavily focused on, and in the case of the modules, I think it's around that 15 to 20 million that we're focused on presently. Doesn't mean we'll close all of that, but that's certainly the ones that we anticipate we'll get pretty close on.
Williams asked sales team size and cost per salesperson, as well as lead time on training to actual sales. That's up to you if you want to answer
that. The sales team size, there's about 8 in the sales team. I'd rather not disclose the other elements. I think that's a little bullish, but the sales team are actively focused on success. We go through with them their performance on a quarterly basis, and we make decisions on how we move forward from there.
Matthews asks, how long would the additional 58 racks take to be installed at Sydney 01?
Additional 58 racks to be installed. Does he mean, I'm assuming he means sold, customers sold. The 58 racks are there and available for customers to take up today. So I'm assuming sold. We anticipate over the next 6 months we'll do that.
Okay. All right. A quite technical question. Will a new Uptime Institute certificate be required following the next stage of SY Sydney 01 development?
No, it doesn't. It's not required. The Uptime certification is now done for that facility. As long as we maintain the same design standard that we have, we're not required to have another certification of construct. It's done.
Beautiful. All right. Is there any final questions? But for all those questions that have come through, thank you very much. Really good questions there. I'm not seeing anything else come through, Matthew, so I'm going to leave the final word to you.
Look, Patrick, and to all investors that have taken the time out of their Wednesday evening to join us, thank you very much. We're obviously focused on communicating to our investors as often as we can with relevant information. I hope this was helpful. This is our presentation that we put to the market recently. We will update a presentation to give you a view next time as to where we're trending. We, the management team, are confident in our position in the market, and we anticipate that we will continue to execute. We won't be bullish, but we'll be focused and we'll deliver. So thanks very much for your time, and Patrick, thanks again for hosting.
Absolute pleasure. Thank you, everyone. Cheers.